Hello there everyone, video today is all about the winter fuel payments. Recent U-turn by the government, the reintroduction of the winter fuel payments. How exactly will that work? It will be policed via HMRC because it's not a case of, here you go, everyone who's entitled to them, have the money, thank you very much. It is going to be what we call means tested, which means that if you earn over a certain amount, you're going to get that clawed back. So how's that going to work? Let's have a little look at this. So HMRC to run this in terms of the clawing back. Okay, that's the first thing. Now, this applies if you are resident in England and Wales. I don't know how it works in Scotland, but we're just talking about people residing in England and Wales. And it's all about this 1 week in September 2025 as to whether or not you're going to get this payment automatically from the government. So if you are resident in England and Wales between the 15th and the 21st of September 2025 and you've reached the state pension age by the end of that week, you will get it for this winter. All right? So if you've reached the state pension age by the 21st of September 2025, you will receive the winter fuel payment from the government for the winter of 25-26. So a few months after that day, but it's all about your age on 21st of September 25 and being resident in England and Wales. All right, what's next? No action to take. You don't have to call up and say, yes, I'm 69 years old and I'm resident in such and such. No, listen, it's all automatic. If you are that age, residents in England and Wales, you will automatically receive the winter fuel payment, which is £200. £200 if you are between state pension age and 80. And that winter fuel payment goes up to £300 if you are over 80. But it's paid to a household, a couple, husband and wife. So let's say you got two individuals, both in their early 80s and living together, husband and wife. They don't get 600, they get one lot of 300 between them. That's how it works. All right. So what about the clawback? Like I said, it's not just the end of the story. If you receive the winter fuel payment, unfortunately, some people will have to pay it back or some of it back, so-called clawback. So if your income is above £35,000, that's when the clawback will start to bite. So income being income from all sources. So different types of pension, state pension, private pensions, interest income, dividend income, whatever that comes to. And it's per individual. So remember, the payment is to a couple, but the testing, the means testing, is per individual in that relationship, if there's two of them. So what does that mean? That means that, let's say you've got husband and wife living together and they both have income of 34,000 each. Okay? Total 68,000. And they're in receipt of the winter fuel payments. That's fine. There's no clawback because not one of them is over 35,000. They're both of them are under the point at which the clawback starts. Not one of them is on 35,000 of income. So both on 34, that's fine. Compare with another husband and wife. One of them's on £5,000 a year and the other one is on 40,000 a year. Now combined as a household, that's £45,000. A lot less than the 68,000 combined household income of the previous couple. But in this case, there is a clawback because one of them exceeds 35,000. So that's how it is going to work. Now, in terms of the mechanics of the clawback, we don't know what that's going to be. In other words, is it £1 of winter fuel payment is retracted for every £2 that you earn over 35,000. That hasn't been released yet. Suffice to say, there will be a clawback once you exceed that 35,000 threshold. Now, if you do have to pay it back, how will that be collected? You won't necessarily just write them a check. You will do it via the tax system. Like I said at the start, HMRC are policing this. So if you've never done a tax return, it will be coded out via PAYE. So if you're in the circumstance where you have to have some of it clawed back, HMRC will work that out and adjust it on PAYE. And you might think, well, hang on a minute, I haven't worked for years. I'm 80 years old. I'm an OAP. I don't worry about PAYE. Well, yes, you do, because if you've got a private pension, say, you're still subject to PAYE on your private pension. And that's how the government will try and claw back the winter fuel payment, by adjusting that PAYE code so that you are in receipt of less of your private pension. More will be taxed to adjust for the clawback of the winter fuel payment. Okay? If you are in the self-assessment system still and you are doing tax returns, then that's how it will be clawed back, and you will either be under or over at the end of the year, depending on what you've got going on. And then, yes, you will wire the funds to HMRC if you owe a balance, like you would as part of the self-assessment. So that's how they're going to collect it. Either PAYE coding if you're not in the self-assessment, or via tax returns if you still do tax returns. So what we don't know at this stage is the exact mechanics of the clawback. At what rates will it be clawed back for those individuals who exceed 35,000 of income? And basically a tip on here is, if you are husband and wife, can you do something to legitimately change your income profile so that you would fall more under example 1 than example 2? Well, what do I mean by that? Well, certain assets, yield-bearing assets, if you transfer assets between spouses, generally it's free of capital gains tax. So you could move assets from one spouse to the other, therefore the corresponding income will follow suit. And let's say the person who had 40 grand of income, if you want to get them down to 35,000 basically. One of the ways to do that is asset transfer. Another would be things like looking at the sources of income. I mean, there's nothing you can do about your state pension or your private pensions, but things like savings. What if you've got a load of cash savings? Particularly the last few years, interest rates have been fairly decent for savers. So if that interest is pushing you over this 35,000 threshold, what about considering moving it from a general interest-bearing account into an ISA, for example? Because ISA interest is tax-free and wouldn't form part of the calculations. So that's the takeaway from this, is have a look at the profile. If you're in that situation, a husband and wife, and one of you is over, or you're both over, what can you do to get your income down so that you don't have the clawback on the winter fuel payments? So just an overview there on what is coming in from this winter. Like I said, crucial date, residency and age on the 21st of September 2025. If you like this video, please do subscribe. And as always, I'll see you soon.